So what does a falling rupee now mean for the Indian economy, indeed for global economies? Are forex reserves at a comfortable level as far as India is concerned? Is inflation going to become the biggest challenge that will further dampen spirits? Is India in a better position than others to face the turbulence that possibly lies ahead? Joining me now, Nilesh Shah, Chairman, CII National Committee, MD, Kotak Mahindra Asset Management, and someone who's been part of the Prime Minister's Economic Advisory Council. Dr. Abhik Barua is Chief Economist and Executive Vice President at HDFC Bank. Siddharth Sanyal is Chief Economist and Head Research at Bandhan Bank. And Siddharth Zarabi, Managing Editor, Business Today TV. Let me come to Nilesh Shah because just take a look at these hard numbers. The rupee reaches an all-time low of 77.41 against the dollar. India's foreign exchange reserves falling below the $600 billion mark. And you've got foreign institutional investors on a selling spree. April, the 7th consecutive month, where FIIs have been net sellers. Outflows, $3.8 billion. Inflation biting, retail inflation around 7%. Should we be worried, very worried?
Rajdeep, it is all about how we see the numbers. Let me give your narrative in a different format. Rupee has appreciated 13.5% against yen in last 1 year. Rupee has appreciated 9% against GBP last year. Rupee has appreciated similarly against euro. So rupee is actually on appreciation move. Second, while FX reserves have fallen, India is one of the few countries in the world where FX reserves are still higher than its FX debt. While inflation is high in India, it is one of that rare period in India's history where Indian inflation is lower than American inflation. And while growth is coming down in India, it is still for the second year in running fastest growing major economy in the world. So it all depends upon how we want to see the economy.
I as a journalist tend to see things as half empty. You as a person who is a market analyst looks at it as half full. I'm just asking you, yes, we are doing better than other economies relative to the dollar, but should we be worried? I come back to the question. From your smile, I detect that you seem to believe that we are in a comfortable position. Are we comfortable given the fact that we could have a further spike in oil prices, that this war in Ukraine could continue, that we have a lockdown in China, all of which could be affecting the world economy and we are no longer insulated from it?
Undoubtedly, Rajdeep, we can't be complacent. As you very correctly mentioned, we are in a very uncertain world where Russia-Ukraine situation can pull oil prices higher. In our Kundli, Rahu and Ketu is oil prices. A 10% rise in crude means 20 basis point drop in our GDP growth, 40 basis point increase in our inflation. So while we are better off compared to many other countries, we can't afford to be complacent. We need to be on our guard. We are seeing across our neighborhood how bad economic policies can create disaster. Pakistan, Sri Lanka, all are classic example of how bad economic policies can create disaster. So we need to be concerned. Undoubtedly, it's a very, very challenging economic environment. We are oasis among the desert, but we still need to be concerned.
Okay, you use the word oasis among the desert. Good word to take to Dr. Abhik Barua. Are we really an oasis in the desert? Or is it the fact that slowly even this oasis is facing a problem at the moment that could lead to further desertification?
Yes, it depends on a couple of things on how you define what you define as the desert, what size the desert is. My sense is that yes, we are better placed than a lot of economies, including a heavyweight economy than China. There could be, to use your word, further desertification. The period of turbulence might persist for a while. I mean, this is rough weather. This is likely to continue, and I don't think we have a fix on how long it will continue. So we need to be prepared for a lot of uncertainty, turbulence in the markets, impact on inflation, growth, etc. For the near term or even the medium term.
Now, when you say
The
near
que-
term, medium term,
So let me
how?
sort of define near
Yeah.
term specifically. Say
Yes.
3 months, medium term, I would say 6 to 9 months. The question is, in this turbulence, will the plane crash? For other economies, the plane might crash. I'm reasonably confident, and I'm just sort of echoing what Nilesh was saying, that we are unlikely to crash. This does not mean that will be entirely protected from the turbulence. And I think inflation certainly is a big issue. It is, as you understand better than me, a very major sort of political issue. Bringing it down is a huge challenge. There are challenges on the supply side, on monetary policy, and so forth. And that's the problem that will sort of keep policymakers and
Right.
politicians worried going forward.
Siddharth Sanyal, will that also affect growth? Because you have an RBI report which says the Indian economy may take 12 years to recoup pandemic losses, estimating output losses during the pandemic period at around 52 lakh crores. Now you've got high inflation, you've got global risks that seem to be only deepening by the day. Will this all affect growth even more substantially than feared initially just a month ago?
Undoubtedly, the near-term recovery will face some additional headwinds. At this moment, there has been very significant impact on disposable income in hand, especially for the lower end of the socioeconomic pyramid. And what we have seen, in case of India, private consumption driven recovery was what was expected over the course of the last few months. Now what is happening at this moment is that the consumer confidence index, which was recovering somewhat, the last reading has been in the early COVID days level after a significant recovery from its lows. From its lows, actually the numbers are about 40% higher. But whether this recovery will continue will depend very significantly on how the disposable income over the course of the next few months pan out.
Right.
In the month of April, we have seen some indication that people might go a little slow in terms of credit demand on ground. Again, I would agree completely with what Nilesh ji and Abhi mentioned very clearly, that we are possibly in a much better position compared to many other peers. But at this moment, there has been a significant impact over the course of the last about a month and a half.
Right. You know, Siddharth Zarabi, you track North Block, you speak to people in the finance ministry. How worried are they? You know, there was a sense that post-COVID, Indian economy was on this road to recovery. Then comes the Ukraine war, oil prices rising. You've got inflation surging across the world. There are supply constraints. China heading for another lockdown in Shanghai. Is there a worry or not in North Block? Or is the attitude, don't worry, be happy, and just show and tell the world, look, we are better off than the rest, so don't worry?
Well, I won't say that is the attitude. I think the attitude also is that we have seen perhaps worse. And I remember, not in the recent context, but some time ago, asking a senior official, and he said, what's new in that? We've been on a roller coaster for quite a few years. Rajdeep, no one knew on the 1st of February what would happen on the 1st of April or 1st of May. And like speakers, economists before me have said, that we are now in a period of high uncertainty, I would say extreme uncertainty, for certain reasons. The current latest spark or straw on the camel's back is an external development on which we have had very little control, which is Russia and what is happening in Ukraine. China's continuing COVID struggles and draconian lockdowns are having their own impact. So,
and the Fed rate hikes, which is again, we are likely to see possibly a few more hikes, which is again a cause of concern.
I wouldn't call a Fed rate hike a cause of concern. It is something that the RBI preempted 24 hours earlier, and I compliment the RBI for doing that. I just want to make one clear point. The impetus and responsibility on the central government and our states to once again be prepared to support the economy has now become far more important. And just one last point, Rajdeep. Please take note, and I keep saying it on your show, today is the 34th or 35th day that petrol and diesel prices, the daily changes have been stopped. So the government of India is taking one step to somehow control this imported oil-led inflation. It has an impact on oil company balance sheets, but taxes are not being cut by the center and states. So I think that is the biggest and most crucial issue on which we need to see action, and hopefully we might get to hear something on that in the days ahead.
But we are just putting up a graphic showing food inflation, which is also steeply climbing, or slowly certainly climbing, and that should be a worry. Fuel inflation remains a concern as long as the war remains in Ukraine, because we are hostage in a way to global oil price hikes. But Nilesh Shah, given that uncertainty, the last thing businessmen want is uncertainty. We are seeing the stock markets. You follow the markets very closely. We are seeing foreign institutional investors have been pulling out for the last 6 months. There are concerns at the moment. The LIC IPO is basically being driven by domestic investors, it appears, rather than any foreign investors. Is that a concern that even markets could take a hit in the near term?
So undoubtedly stock markets will be choppy in the near term. With so much uncertainty on Russia, Ukraine, oil, US Fed rate and India inflation, it is unlikely that stock markets will become anchored. They will be volatile. But we have to remember that over last decade or so, India has delivered more return than its peers like Brazil, like South Africa, like China, like Indonesia, like Turkey, like Mexico. Our equity valuations are today at nearly all-time high vis-a-vis our peer group, nearly all-time high. And Indian local investors are there in the market to buy. If FPIs today want to book profit, India is the best country because they can sell without creating much price impact. So stock markets will be volatile in the near term.
You're saying that stock markets will be volatile in the near term. The key factor, though, Avik Barua, is inflation. You know, there is, as Siddharth says, the government seems conscious of the fact that you've got to rein in fuel inflation at the moment. They haven't hiked duties in the last 30 days, but the concern is that the situation may well go out of hand. We've seen, for example, atta prices only because wheat production is down at the moment, and you've got food prices rising all the time. You've got summer vegetable prices, other tomato, all rising at the moment, at least in the short term. Is that the biggest challenge? To get inflation under control is India's biggest challenge over the next 6 to 8 weeks?
At this moment, yes. And I think inflation certainly is much higher than we had anticipated. And this is largely because of external factors. Even sort of food prices like atta prices have moved up because there are pressures on the international global wheat markets because Ukraine and Russia are big producers of wheat. So if the problem is not internal, it's that much more difficult to handle, and you need a combination of both fiscal measures, which sort of the tax cut that Siddharth referred to really is, and monetary measures at the same time, because there's a quick sort of feed through to other products. Inflation is a sort of a contagious thing. If coal prices move up, for instance, your neighborhood, press wala who irons your clothes starts charging you more for his services. So it just sort of percolates through the system very quickly. So both these things, the initial drivers, which are largely global in nature, will have to be handled, and the dispersion of inflation across different items and services, which are sort of more domestic, would also need to be tackled. So I think the international drivers would have to be tackled largely through, a whole bunch of things apart from, cutting taxes. I think our diplomacy, for instance, has been very nimble in ensuring that we still sort of are able to buy oil from Russia, for instance. I thought that was a very, very clever diplomatic move. So you need a combination of these things to get your formula right.
Siddharth Sanyal, final word for you also. Inflation, the biggest challenge in the near term?
Yes, because the pressures are coming at this moment from multiple fronts. If you see, we all discuss a lot about oil prices, but also food prices, which is also quite global in nature, that has been a point of worry. What we don't discuss adequately, possibly, over the last maybe 2-3 years, and that particular phenomena continues, and which is beyond the control of anyone. The small patches of weather disruptions in India has actually increased very significantly over the course of the last couple of years and causes near-term food price spikes. Also, metal prices remain high. Overall producer price, which is measured by WPI, remains very, very high. So near term, it's very clear that the focus has to be in containing inflation. Otherwise, as you mentioned earlier, will have a significant impact on near-term growth recovery.
Let's leave it there. Clearly, inflation remains a big concern. The falling rupee, of course, is the immediate news spec that we had today. There are global factors out there. Are we in a better position? Most of the panelists seem to believe we are compared to the rest of the world. But given the fact that we've just come out of COVID and now we are facing the fallout of the war in Ukraine, India is a country where the economy must be the top focus. The red alert must be on the economy. Treat the rest as weapons of mass distraction, as I call it. Thank you all very much for joining me.